Hi again, everyone. I hope you're all doing really well. With this video, I'm going to be making my return to covering stock-related videos after a 2-month life hiatus. And well, we are basically going to pick up where we left off and take a look at Exela Technologies, ticker symbol XELA. So despite recent poor share price performance, Exela Technologies has continued to produce some positive movements as a company. I do believe that this is a stock that has good medium to long-term potential, and as a result, we have continued to see positive momentum in Q3 and so far through Q4, which is indicating that the company is headed in the right direction. So in this video, we will have a look at some of the recent developments for Exela Technologies, have a scan through some of the company's latest financials and debt situation, and just generally weigh in on where the company is headed. So let's get into it. So to start with, here is a quick look at the main news catalyst that helped Xela rebound slightly during Tuesday's trade. In short, Exela Technologies has partnered with the UK's Post Office to use its ICS platform as well as other solutions to handle the UK's banking activity that is operated via the Post Office system, primarily the handling of cheques and money orders. Exela already works with several major banks in the UK, so this is very much an expansion of their banking footprint in what is a significant market. What I like about this headline is that while much has been made about Exela's growth in small business clients, the development is perhaps a bit of a market reminder that they do also offer business process automation services to a wide range of large organizations and businesses. Despite their low share price and market cap, Xela is actually a large company in terms of their operations, number of markets they are present in, and the number of clients they work with. This business significance was also further demonstrated in their less significant but still important news yesterday, being a 3-year extension of a contract with the New York City Department of Finance. As we can see here, these two catalysts helped bounce the Xela share price by about 2 cents yesterday, or just short of a 2% improvement. However, considering the major US indexes both had strong days, with the S&P 500 and Nasdaq both gaining 1.8 and 2.4% respectively, the Xela share price bounce was nothing too significant in general market terms. Glancing at some charts, we can see from the last time I covered this stock in late October, the stock has seen a temporary consolidation followed by a continued trend down. This has not been that surprising, as it is a trend that has been seen in all major indices in this same time period, although it is safe to say that given the increased retail interest that Xela has experienced this year, like other retail favourites, it has fallen particularly hard during this period. If you are trying to capture some of the lower highs for a potential quick day trade opportunity, I think this purple line has captured some potential short-term selling points nicely. The fact that this line is riding the top of the Bollinger Band trend would suggest that a move up to $1.15 is technically not out of the question currently, especially if you think there will be a continuation of positive sentiment based on the UK Post Office deal on Wednesday. This move is presenting about a 10% jump on the current share price of $1.06. However, zooming in on the chart, we can see that the recent trading momentum has failed to see Xela reach the top of the Bollinger Band in almost 10 days. Perhaps one could make a case that with a general lower trading volume across the market at the moment, perhaps Santa may visit a little early this week and provide some further positive price action, making for a nice potential short-term trade. But who really knows? This brings me to the other recent major news catalyst for the company that extends back to last week on the 17th of December. Xela had completed a much welcomed debt reduction exercise. It has been no secret that Exela Technologies has been massively over-leveraged in the last few years, which has put the business in the weak position of having no free cash flow, causing a spiralling debt situation for the company, despite numerous positive operation developments in that time. It has been hoped that improvement to these debt figures would be on the cards, and it has been to this effect that many retailers have been either taking a punt on the stock or digging in for the longer term. The board has regularly discussed fixing the debt situation, and as we can see, last week's announcement represented significant progress towards this goal. Exela Technologies had managed to reduce long-term debt by $454 million, reduction of cash interest expense and loan amortization by $42 million, and on track to exceed incremental annual free cash flow of $50 million. So this is all very pleasing news, and I'm surprised it didn't do much to shift the stock price last week when it was announced. So when we look at the raw effects of the recent debt shrinking exercise, this makes for a huge improvement in the underlying value of the share. Following Q3, the total amount of equity you were receiving per share if you purchased Exela Technologies was negative $10.11. for every share you own, which sounds terrible, but considering this figure was as high as $32 the quarter prior, it was a big improvement. Now, given the reduction of $454 million of debt, this alone gives a much improved tangible book value of negative $4.54 per share. Of course, this is just an estimate, but it represents a significant improvement. It also shows that Xela's board have stayed true to their commitment to work towards overcoming this debt hindrance. And if this current trajectory for their debt management can continue into the next year, we may see Xela actually enter back into a positive equity position early in 2022, which arguably puts the current $1.06 price tag as a good buying opportunity if you prescribe to this long-term narrative. So one last thing I want to point out is that Xela has still got an overall buy consensus among the two brokers covering the stock. I think the continued good news in terms of client growth and, more importantly, the significant debt restructuring of recent times is all extremely positive for the company. I personally believe, given the company's trajectory right now, and I know I have said this before, but I believe it is a great buying opportunity if you are in it for the long term like I am. As such, I'm going to look to double my position at these discount prices before Christmas. Of course, what I'm saying here is not trading advice, but merely my thoughts on the stock. What do you all think about the current state of Exela Technologies? Do you think we are seeing a great longer term buying opportunity or not? Let me know in the comments below. Until next time everyone, may the markets trade in your favour. Cheers.